Right. Before we proceed to the technical analysis section, I felt like it's important that we talk about one of the most important aspect of fundamental analysis that you have to be well aware of, and this is how to read the Forex economic calendar. So when we spoke about fundamental analysis, I highlighted a few aspects that you need to be looking out for in your fundamental analysis, and these ranged from GDP, CPI news, interest rates, NFP, etc. So the Forex economic calendar is where you get to see the news release of all those aspects that I've mentioned. This is where you have to look at in order to see, okay, the number for NFP or the GDP for a certain country, or the retail sales for a certain country. When they release those news, the economic calendar is going to give you the statistics behind that trade news. So we are going to be discussing in this section how to read the Forex calendar. We're going to be talking about the top news events that you need to be well aware of, which we have already mentioned in the previous section, and how then do you apply these news events. How do you read the Forex calendar? Economic calendars lay out the dates and potential impact of a scheduled national and international events that are likely to affect the price and popularity of given market or assets. Because certain types of events have been known to impact trade in significant, predictable ways, the nature and the date of each event on the economic calendar can be used as a trading indicator to maximize profit potential. Recurring news events tend to make the most compelling indicators because they have predictable effects on trading sentiment and volume. Examples include scheduled publication dates for widely regarded market statistics or surveys, and anticipated events such as federal decisions on interest rates, trade balance, and inflation. Although other international events can affect market volatility, the economic impact and timeline of solitary events is less certain and can therefore be harder to trade. There are many free versions of economic calendars available online. There's a lot. If you go to my FX books, you're going to see a calendar. If you go to Investopedia, you're going to see a calendar. If you go to investing.com, you're going to see a calendar. So there's quite a lot. But designated trading platforms tend to offer account holders access to a more agile and all-encompassing calendar. Before you choose an economic calendar at random, remember that your calendar is only useful as the events are relevant to your chosen market or markets. Because Forex trading is international in nature, it's helpful to have a calendar that allows you to set custom qualification criteria and filters results by country and currency used. Most economic calendars provide short description of each event, as you are going to see when I'm further explaining and showing you the calendar that I use personally, and provide a value for actual, forecasted, and previous releases. The forecasted number, expressed either as a percentage or as a currency value, represents the market impact, whether positive or negative, the event is anticipated to have. This number affects trading sentiment and behavior leading up to a news event. The previous release refers to the change recorded after the last news event of this nature, and the actual release tracks the objective price movement that occurs following the event in question. So there are some news that we classify as top news events. An economic calendar contains a list of economic indicators which convey certain information about economic activities. Investors use this information to analyze the economic performance as well as predict the future direction of the market. For example, each quarter, most countries release data on the gross domestic product, which is GDP, which allows investors and traders to analyze the performance of the country's economy over the previous 3-month period and make comparison against the last one. Some crucial economic indicators are the Consumer Price Index, popularly known as CPI. CPI is one of the crucial economic indicators which is used to measure inflation. It is a statistic to measure the price changes in a basket of goods and services. We've got also the Producer Price Index, popularly known as the PPI. It is a weighted index which measures the price changes on the producer level, excluding imports. By calculating the PPI, one can be familiar with higher interest rates, corporate profits, consumer spending, and most importantly, the movement in the stock market. Then we've got the gross domestic product, which is the GDP. Anybody who comes from a financial or economic background must know about GDP. It is like the scorecard of the country's economic health. It represents the total market value of all goods and services within a period of time, normally 3 months. It is one of the data-driven indicators, including the PPI, which tells a lot about a country's economic condition. And finally, we've got, I would practically say, one of the most important news events that you must be well aware of: the interest rate decisions. Interest rate decisions or monetary policies refer to a process by which central banks, for example, the Federal Reserve for the United States, control the money supply. Every country has a monetary authority which decides and takes decisions regarding the interest rates in the country to promote stability and economic growth. Apart from this, there are other indicators which include unemployment data, industrial production, core retail sales, building permits, and much more. These are equally important economic indicators which one can track through a live economic indicator. So all these high impact news events that are listed here, which is the non-farm payrolls, the interest rates, the GDP, CPI, retail sales, the Forex calendar shows you all these events and the time that the event is going to be released, the previous news released, what was the statistic when it was last released, the projected statistic, and then the actual release when the news has been released. So then, how do you apply the news events to your trading strategy? To capitalize on news events, start by choosing a major currency pair that is likely to be influenced by a major news event. A good example is when using the NFP report, the non-farm payroll report, as an indicator. You should seek out a major USD currency pair because NFP is a measure of US markets, Once you have located a currency pair, determine what direction to trade in is a bit challenging. Rather than placing orders based on forecasted numbers or market bias alone, interpret this information in the context of your other technical indicators and insights. Examine the current market trend, strength, and direction, and evaluate supply and demand levels up to the news event and immediately following the event. If a news event is anticipated to reveal positive market insight, you may see a steep surge in price action prior to the news release and witness an impulsive dip if the news defies popular expectation. As with any smart trading strategy, timing is key. Day traders may look to capitalize on price volatility caused by market bias leading up to major events, but longer-term trading strategies tend to favor those with more conservative approach. By waiting to enter into a position until immediately after the event has occurred, traders can capitalize on the volatility caused by the event and use the actual versus forecasted values to help predict reactionary market movement. Now let's take a look at an example of a Forex calendar from investing.com and how to interpret the calendar. Right, so let's take a closer look at an economic calendar. Personally, I use investing.com's calendar for my news events. So let's take a look at what it looks like and how to interpret the calendar. So firstly, you have to you go to a browser, type investing.com. So this is gonna open the investing.com platform. It's quite a very useful website of getting news in regards to the market, but yes, you have to choose which news you want to focus on and how to interpret that news. But for me, mainly I use investing.com for the calendar. So when the investing website opens, here on your top right, you're gonna see where it says economic calendar. Yeah, so this is where we're going to be focusing on for today. Yes, there's a lot of news that you can get from this website, but for now we are going to focus only on the economic calendar. Now, when you click and open the economic calendar, you are met with this say a schedule of events for that day, you see. So when you open it, it's gonna show you the events that are going to be occurring during the course of that day. So for instance, today is Friday the 27th of March. So we've had this news the whole of today. This is all the news that has happened today. So there's a lot of news that gets released depending on the day. Like for instance, you can see today there was quite a lot of news. So the investing calendar, it shows you the time. We've got the time, which is the time which the news event is going to be released. Then we've got the currency, as in the news that is being released, from which country it is and what currency it is. Like for instance, you can see here the first news that came out at 1:30 a.m. It was in regards to the Japanese yen, and then you've got the importance section. This part is very important, right? See the part with the bull heads. So what does this mean? One bull basically tells you that the news is not that it's not going to make much of a strong reaction on the currency. Two bulls, then you need to take note of there will be a bit of volatility coming into the market when this news event is released. Three bulls, definitely you need to be well aware of. Like for instance, at 7:30 this morning, we had Central Bank of India releasing the interest rate decision, which was changed from 5.15, they dropped to 4.4. So after importance, you can see event. This is where you get the name of the news release that is coming, that is going to be released. So this is where you see all those CPI that we were talking about, the interest rate, the repo rates, the retail sales. You see, that's where all it comes, and it will be telling you, okay, we've got these core retail sales from which country. We've got them here. This will be Norway. You see, Norway core retail sales, previous it was 0.5, forecasted was 0.2, and then the actual release was 2%, which was positive. So after the event, then you're gonna see we've got actual, we've got forecast, and then we've got previous. So this will be the previous news release from last time when this event was released, right? And then you've got the forecast. The forecast is like an anticipation, what the market is anticipating the number might be. You see, like for instance here, the previous was 0.5%. This was the Tokyo CPI for March. The previous number was 0.5%, and then the forecast was 0.4. Then the actual release came in at 0.4%, so it was actually correct. So this is how you interpret the calendar. You're gonna have to take note of, okay, what is this news? Like for instance, today at the 3 p.m. in the afternoon, we had the news release from the Central Bank of Canada, the interest rate decision. They released their interest rate decisions. You can see it has got 3 bull heads, and it tells you this is for Canada, and it tells you the time the news event will be released. So the previous release was 0.725%, meaning the interest rate from the Bank of Canada was 0.25%. There was no forecast, right? You can see there was no forecast. So the actual release was 0.25, meaning they cut their interest rate decision by 50 basis points, 50 BPS. You see, 50 basis points. So if you carry on, say you keep going down and everything, you're gonna see that there is quite a few news releases, and it will tell you the impact that news is going to have. So me, normally what I do now, I'll use the filter section on the calendar, right? And I'll scroll down to the bulls. I don't normally show the news release which has got one head, but mainly the ones that have got 2 heads. Then I'm gonna click apply. Then you're gonna see that, okay, my calendar now only has like the high impact news for that day. Now if I want to see what news is gonna be released next week, I'll also go to next week. Then it's gonna show me news release from Sunday, which is tomorrow. You see, up until the end of next week. But if I want for a specific day, then I have to come to my calendar there, and then I'll say no, I just need for news release for 1 April, which is next Wednesday. Then you're gonna see all the news releases for next Wednesday. Then you start interpreting, you anticipate now to say, okay, this is what's going to happen. Like let's say I want to see news for next week Friday, which is Friday the 3rd, right? I already know that there's an important economic indicator which is going to be released on Friday the 3rd, which is the NFP, the non-farm payrolls. And this news event, this one here, the one that is going to come at 2:30 my time, you see, the non-farm payrolls. Obvious, there is going to be an expectation that a lot of people are going to lose their jobs because of the coronavirus. Many people have been laid off. So the previous number was 273,000 employed people from last month up to the current news release. But now the market is forecasting a negative 100k, meaning a lot of people are going to lose their employment. What will this do to the dollar? Market is gonna turn to the downside if the news releases come with a negative number or a lesser number than the previous release. So now I'll be anticipating a negative release on the non-farm payrolls. Now when I link that to my technical analysis, I'll be looking at the dollar index, which is the measurement of the dollar against many currencies. So if the number comes out negative, then I would expect the dollar to weaken, to be bearish. But if the number comes out positive, then I'm expecting the dollar to be bullish, meaning it's going to appreciate in value, meaning the American economy is doing what? It's doing great. But if the numbers come negative, it means the economy didn't do quite well. Not many people were employed, of which that's what we're anticipating in the current market condition. So this is how basically you're gonna be interpreting a calendar. So this is something that you have to do, not like every 2-3 minutes. Like beginning of the day, you take note the current space that you'll be looking to trade. Then you say, okay, I'm going to be trading mostly the dollar. Then you see what news events will be released during that day that might affect your positions. You see, don't just go blind into a trade. Firstly, understand, get to know what news events is coming up on the calendar before you get into a positions, because news releases, they can be good to your trade, and they can also be bad. They can take you out of positions. So yeah, I decided to say, let me show you how to interpret the Forex economic calendar. So now in the next section, we're going to be talking about more about technical analysis. We've already covered fundamental analysis, and we've covered how to read the economic calendar, which is part of the fundamental analysis, because this is where you get to see all the news event releases. So in the next section, we're going to be discussing technical analysis, which is now more of reading what the MT4, MT5 or C trader platform is telling you. So I see you in the next section. Thank you.